All right. Good morning, everybody. So a lot to go through, huh? Microsoft reports today. I got some data for you that might help you approach that a little bit better. We had China stimulus rock the market yesterday, and it's not done. Was doing a little analysis on just one of the names yesterday, and we have a gamma squeeze within the market makers. Think the whole Reddit situation, right? When people were attacking the shorts in GameStop and GME and all of those, and it forced the market makers to buy shares to cover all those options, right? They were going in and just buying a ton of options. Industry's nickname for that event is a gamma squeeze. And you can actually spot that within Thinkorswim. So we'll go through that too. As for the indexes, last week we thought it was going to be a sideways week, and it just ran us over. We have the same expectation for this week, at least into FOMC, and so far that's holding true. Yesterday was a perfect example of selling into strength every time we got into the high of the day, sell that sucker off, and buying into weakness every time we got back down into the lows, buying it back in again, with a real fair expectation that we weren't going to break out and make big sweeping moves. We have the same expectation for today, at least into the end of the day. Could be a little bit of a move after hours with Microsoft today. We can see what's going on around the world here. Japan down more than 0.5%. That's not really as bad as it sounds. 0.5%'s not much. We had Hong Kong up more than 3%, which, you know, if we were talking about the S&P and we said the S&P was up 3%, that would be, kind of a pretty good day. For this market, that's a really good day, right? But that's a part of that stimulus that we're talking about. So that stimulus really affected markets, and you can put them into groups like the China ADRs in the EV market, right? Like NIO, Li, XPEV, or just more China ADRs in general, PDD, BABA, Baidu, JD, and we can see that in the ETF like KWEB. So we'll kind of dig into all of that. We also have Google and Meta. Not for Meta, it's tomorrow, but we got Google and Microsoft today. ECB on the 27th. And like I talked about yesterday, the BOJ decision on Friday. Okay, so you can see that tonight we've got some anticipated potential impact coming out of Australia. So certainly worth keeping your eye on what you're holding, right? Know what you own, and kind of ask yourself, are you comfortable with the markets making a 2 or 3, maybe a 5% move? Because that's what's on the table. It certainly could do that. Wouldn't be asking for too much. This is a picture of BABA's option statistics from yesterday. It's from the Thinkorswim platform. And we can see stock sizzle here. Thinkorswim invented that phrase sizzle. It just means 5-day average. And when it says stock sizzle, they're talking about share volume. On Thinkorswim, ratios like that are start at 1.0. 1.0 equals 0. So keep that in mind when you're looking at these. If it says 2.7 and 1.0 is neutral, then 2.7 is actually 1.7% above the 5-day average. We can use that to see if there was above average share volume on a day when we had above average options volume. Right? So, okay, we had a little bit. These aren't even really big numbers. A little bit of options of volume in BABA with share volume. The greatest amount of options traded were at the ask or above at 59%. What's that tell us? Well, when they're hitting the bid, they're trying to sell it and they're willing to sell it cheaper than anybody else. And when they're hitting the ask or above the ask, they're willing to buy it and they're willing to pay more than everybody else. Why? Because they don't want to stand in line, right? They don't want to stand in the queue. So they'll just reach up. It's what we call it, where they're reaching for it. So at the ask and above, AA is what you'll see if you're looking at like black box stocks and things like that, at the ask or above the ask. So the greatest number of trades on the call side was at the ask or above, and we're out of the money below a 20 delta. Generally, when we're looking at options that are at a 20 delta or below, we assume that those are sell to open trades, right? Say selling some calls around a 20 delta, selling some puts at around a 20 delta. That's what we would normally expect. But that's not what they were doing. They were buying at 20 and below. So they were buying out of the money calls and they were financing it by selling puts. All right. So that's crazy super bullish, not just in BABA, but across the board. We could do that on all of those names and kind of come to the same conclusion. One, it's not done yet. And two, that's crazy bullish. This is Microsoft. The little range that is drawn here is the 5% move that it is talking about in these labels. This is a TRB setup in Microsoft. That's what we have on deck, is the potential for a TRB getting at least back to 365 easy, no problem. Double that move for earnings. So from 345 to 365, and then from 365 to 385. Yeah, you like it. So all these labels, what's it telling us? Analyzing the last 8 quarters, Microsoft has beat 7 of those 8 and missed 1 time. They have what they call a pre-earnings ramp. It's a 21-day intro into earnings. Most markets, if they are a positive influence or they get covered a lot in the news, they'll get a lot of people eyeballing it. And of course, they start trading it. It's usually positive. It's a ramp into earnings. That's why they call it ramp, because the market runs up into earnings. But not for Microsoft. Microsoft has a history of fading down as it comes into earnings, with an average negative move of 1.3% within that 21-day window. In the last 8 days before it reports, it generally goes sideways with a 0.09 move on average. So about 32 cents within that last 8-day window. And then it reports. It beat 7 out of the last 8. And then they have the after earnings window. It's generally an 8-day window that we're looking within. After it reports, Microsoft has a habit of moving about 4.66% within that 8-day period. Now, this is important because it's telling us over here that in the last 8 earnings, 7 which were beats, it moved more than 5%, 5 out of those 7 times. So it moves greater than 5% for its earnings, but within 8 days, it's back below that 5% window to around 4.66% on average. So big move for Microsoft, more than 5% after a positive earnings, but it doesn't keep it and it sells it back off again more often than not. All right, that's what that's telling us. How many 8-day moves were less than 5%? 2. How many were greater than 5%? 5. On the one earnings that was a miss, Microsoft moved more than 5% to the downside on the one time that it did miss. And right now they're pricing in a $6.37 one standard deviation move for Microsoft. So we got a little bit of information, right? Now you're a little better prepared for Microsoft earnings tonight. You can see here in this earnings chart, the clouded shade, how it fades down into an earnings and then it turns green afterwards, but didn't keep it. Same thing, sideways to a fade, got positive, but couldn't keep it. The one earnings that was good, or at least that went up into earnings, had earnings and then sold off afterwards, was near the October lows when the whole market was really negative. So not much of a surprise on that one, right? All right, volume's light, which is not a surprise. We have every expectation that the market's going to kind of sit out a little bit and has its eyes on FOMC. I'm still going to argue that FOMC is not the biggest event for this week. It's going to be Japan. Looking out at the weekly chart, we're still inside week. Not a surprise. We didn't go anywhere. And if we wanted to use a range, last week's range would be a perfect high and low for this week until at least the FOMC. 45.28 and 46.09. We talked about that yesterday, right? So far this morning, we challenged yesterday's high and rejected. That was a rally-based drop. That liquidity is done. So you can kind of take it off the table. But we don't know if the sellers are done, right? So what you want to look for on the dome when we run back up, if we run back up to retest that high, is watch if they refill, right? Say there's 700, 900 contracts sitting on that in the ES. We run up into that level and start to pull away. Those contracts obviously got taken off the table. Did they reload the contracts in that same zone? Is there still a big seller sitting up there? Basically is what we're asking. We do have an MDP. It's a missed daily pivot, so we haven't come down here and hit that yet. Generally speaking, markets hit their pivot point about 80% of the time. So the fact that we haven't hit it yet today just says we're in the 20th percent, right? We're doing something that we don't normally do. We are above the weekly pivot, which generally puts us in a bullish bias, but with the low volume and being stuck inside of yesterday's choppy, nasty range, we have no expectation that today is going to do anything better for us than it did yesterday with a choppy, nasty range. That's the plan today, right? It's expected to be the same thing as yesterday. Sell the highs, buy the lows, anticipate chop and reversal and nastiness. Weeks like this is what vacations are for, right? You would be much better off just avoiding all of this trash completely. That way you save your mental capital, you save your real capital, you don't frustrate yourself trying to trade a strategy that doesn't fit this environment, and you don't get chewed up from random moves moving in opposite directions just out of the blue. Now, is it tradable? Yeah, absolutely. Everything is tradable. But if you're losing more often than you win, quit doing the hard stuff. Yesterday and very likely today certainly fit into that category of the hard stuff. We did get a liquidity draw here, nice drop down and a reset already, and it's not done yet. As soon as we got right back up there, they sold into it again. The same thing that I was talking about with those buyers sitting at the highs, you can do the same thing here with 45.90. Just remember 45.92 is a level of concern. It's been a gamma level for a long time. It's a monthly level. It's a weekly level. It's a big deal, right? 45.92 is a level that you should be familiar with at this point. Trade the ES enough. Wow, think or swim. It's a little slow. Come on, quitter. All right, we're starting to develop a more classic P at this point, the P shape. We don't have it yet. We still got to lose a little bit off of the bottom. The funny thing is, when we lose a little bit off of the bottom today and we start getting into Wednesday, we're actually just going to have a big classic D shape into the profile. And the point of control is not in the middle of the profile. It's actually on the higher end. That doesn't have to remain true, especially through the day today. If we come back down and test that 4560 area and we fill this hole here, right? That shallow area needs to be filled in. Otherwise, the classic D shape is going to be what we have by the end of Wednesday, unless we happen to break that 4,500 and drop down below this zone here. If we stay compressed and don't get a breakout above the weekly expected move, and we don't break down below the 4530, then by Thursday, we're going to have a very narrow, very compressed range of 4,500 to 4,600. Be a nice tight zone. I find it hard to believe that we're going to be able to keep that though, since Wednesday is the FOMC. All right, we took this point of control off the table. We don't have one from yesterday, but we still have one overhead from last Wednesday. That's 4606. This move here is not a part of the kill zone, and it's worth noting. If it was a part of the kill zone, it would have happened at 2 and ran into 4. And instead, we started to get a ramp at 2. Something changed, knocked it back down, and it had to try again. It did get the move done, though, between 3:30 and 4, but it's unusual. So I don't know. I have to point it out because it's not normal. I don't know what to do with it. All right, so this is the range that we drew yesterday and talked about, 4609 to 4528. And that it's very likely that we were going to hold this range in at least into FOMC. And so far that's holding true. We're still sitting inside of Friday's level, which was also yesterday's level, which is now today. That's IX10. Now, yesterday was an engulfing candle if we count the wicks, but I don't like counting the wicks for an engulfing candle. I don't like to do it that way. So I'm going to say it's not an engulfing candle, but it's still IX10. The downside to it being an IX10 is that it's a really wide one, right? We want to find the ones that are really narrow, and then we stay inside of that for 2, 3, 4 days in a row, right? Because then we get a lot of compression. This isn't what we're looking for. These are not the droids you're looking for, right? Nerd. But it's what we got. So we're still going to have the expectation that, we're going to stay inside this range. The thing is with price, it's not going to be all nice and clean and simple, right? You don't have a zone and then price just perfectly stays inside that range. What happens is it starts to get on the edges and it begins to go a little bit farther on each side until it finally breaks that system and makes a big move. So while I say that this is the range, yesterday already started doing that, right? If you look at Friday's level, we peaked outside of Friday's high just a little bit and we came back in. And if you look at Friday's low, we peaked outside of Friday's low and then we came back in again. Already this morning or today, we broke out of Monday's high just a little bit and we've come back in again. There's every expectation we're going to do the same thing to the bottom before the day is done. What that creates is a megaphone pattern. We're not overbought, of course, because we didn't go anywhere. And we're not oversold. All of this pause is really healthy for the market. It's given the moving averages time to get caught up. So with these China ADRs, taking a look at something like BABA, we had that really nice TRB set up yesterday. It made the entire move, so the TRB is done. But when we're thinking about how could we use that going forward, we want to look for a breakout and be concerned about that 97.77 level. It's the orange line there. I call it the warning center. It's in the middle of 1, 2, 3, and 100. So it's the center. And it's a warning because when a breakout fails, it generally won't make it and close above that level. So warning center works nice. If we can get through 98.62, we're going to 100. It will become a magnet, round number, psychological level. We will go there. We just got to get through that 98.62 first. If we were to measure the range from down here and plot it out 100% of the move, gets us at $100.43. So how we open this morning is going to be really important. I wanted to see a gap down this morning. I knew I wasn't going to get it, but that's really what I wanted to see. We're up instead at 97.90. So we're actually above the 100% level here. And we're already above the 111, right? We're at 97.90 this morning. So we're above the warning center. It needs to stick that, right? It's got to hold. So at the open, one thing that we might be looking for, since we're going to be opening, up here somewhere, is a little fade back and then a run. That would be awesome. That'd be the best case scenario. What's more likely, however, is we get more of a Marbozu style candle with no wick on the bottom and just a move up. It's not just BABA, by the way. So if you're looking at this and thinking, well, it's a little too expensive, I wanted to do the shares. Yeah, well, okay, try KWeb. KWeb's a much cheaper product and it encapsulates all of these, right? This is a representation of all of these. Yeah, Thinkorswim kind of lets us down a little bit on this one. So no CFRA or the Street or Market Edge research team, no documents from any of them, and we can't break it down like we could say if it was SPY, right? How it gives us this breakdown of what's in it. Still, it'll work. KWeb is the internet ETF, so it's going to represent more of your tech. But there's also NEO, less than $12. Well, okay, $12.20 this morning, or Lee, $38. XPEV, less than 20. So if you don't like BABA, especially at its high price, you do have choices. And Baidu is another one. Nice TRB setup. It's rare that we get such a TRB like this, though, with the breakdown and then the gap up or the rally up. Still, we'll take it. So with this one, we're just looking for a follow through this morning. We got 151.11. So that's inside day breakout already. We're above yesterday's candle. We got to get through this 152.44, and then we can start plotting those higher levels. Just measure last week's range, and that gives us 155. We could also just measure the last big candle instead, and that gives us 158.66. Either one of those is fine. Personally, I'd rather measure the last week. So this morning, we're already above that 100%. We're already above, where we closed yesterday. And we want to watch that warning center. If we can get through that, then yeah, I think 155 is easily attainable. Just expect things might slow down a little bit, right? That move yesterday was pretty awesome across the board, but can it stick? All right, so KWeb up 2%, emerging markets, which has a lot of the same things in it. A lot of China stock. Nat gas, the FANG names are up about 0.75%. We've also got regional banking and communications. Semiconductors are right behind it though, right? It's not very far away. So if we were to look at risk on, risk off scenarios and put things into a basket, do we have the top three? And that's really the question, right? Because we need at least two of these three if we're going to have a decent rally. We have tech, yes, including different kinds of tech like communications, yes. We have finance, yes. So 2 out of 3, we have the capacity to rally. Thing is, I don't think we're going to rally, right? The expectation is that we're going to hold the line into FOMC. Or at least hold the line into Microsoft earnings, either one. We can see regional banks did good yesterday. They went into the close with a nice swoon to the upside, and it's just continuing that move here in the after hours and now into the pre-market. NY Fang, on the other hand, was just completely flat yesterday. I mean, look how absolutely perfect that was across the highs. That was a great tail yesterday. Right? It was a nice heads up. Now, sure, the S&P kept overshooting the levels, so it was a little rough selling into strength, but the payout was nice. Today, this is up though in the pre-market, more than 0.75%. So we're going to have an expectation that we're going to now be challenging Friday's levels. And if you take it out to a daily chart, the NY Fang is pulled back considerably compared to, say, a lot of the other indexes. Take the Dow for an example. Now remember, the NY Fang, that's supposed to be your mega cap big tech names, right? Everybody loves big tech, Microsoft, Apple, Amazon, Google. So that thing's down, and your blue chip mega cap companies, the darlings of Wall Street, this index is up. This is a part of that rotation, right? That we started talking about yesterday. Of course, with the NASDAQ, it's pulled back very similar to the NY Fang. If we were jumping through all of these different names for the China ADRs, and I'm looking for, say, a swing trade to last it out for a little bit, JD is one that is more beaten down than the others. It's still under $40, just barely, but it is. It has a lot of room to go. And, think about the old Wyckoff theory, distribution and then accumulation. They also talk about how long that base is. So, the longer you base, generally the bigger the move out of the base. We've also got this inverse head and shoulders. So if we were going to use the head and shoulders, then we would need a neckline break, and we don't have that neckline break yet. It's a pretty ugly head and shoulders too, right? Kind of stalled and failed. Such a gappy bugger. Measure the range, plot it upwards. 50% of that range gets us to 41.5. 100% of that range puts us at 44.84. That 44.84 lines us up with these pivot points from back here, right? And a gap that needs closed. We've got one here and there. Cool, cool. So not bad. I mean, we got a lot of things that are making moves. I just don't see the indexes being your vehicle of choice today. If you're trying to trade options on the indexes, you're probably better off doing like an iron condor, broken wing butterfly, ratio fly, something like that, right? Double diagonal. I think you'd be better off doing that than trying to do a directional trade like buying a call or buying a put. Unless you're scalping, obviously, then, no problem. Your better move at this point is much more likely to come from one of these China ADRs, the EV markets, or say something out of the financials, as we can see that those are making moves this morning. The thing with semiconductors, it just fits into that whole tech thing, and they're generally going to be, more costly. I mean, not all of them. You got things like GSIT. It's not so expensive, right? But, that would have to turn around. And so far, it's not. AI was getting hit yesterday in AI products, so probably don't want to go that route. But NVIDIA's pulled back like NY Fang, and so going that route just really doesn't kind of fit. But you start focusing on, banks, or American Express was getting flows yesterday. If we're going to turn around and maybe try to reclaim a lot of this candle, it's not really doing much this morning, but that'd be a nice reversal. We're gapped down just slightly after that earnings. So a nice little gap down, maybe start to turn this thing around and run it back up to 178. The 155 strike puts have a lot of open interest. They're selling for about 135-ish. If we try to split the difference here, selling a 155 puts would be in the lower end of this zone, right? If we were going to mark out this whole zone and break it into, say, quarters, then 155 would be down here in the lower quadrant area. Of course, selling puts naked is something reserved for people that really understand options, but you could do a put spread. Even a $5 wide put spread, is offering about 54 cents. It's not to say that there isn't any risk, just that, that's not a bad way to go. Widen it out a little bit, get about $1.40. That should put the break even at like 158.6, something like that. Maybe wanted it a little lower, right? I like that 155 better. Well, they're positioned nice. That's for sure. So yeah, I mean, within the banks or energy, shoot, I forgot all about that. So energy also pretty good sized moves, starting to kick things off again. And of course, if you see energy moving, you always want to go look at steel, because steel and energy, they're not like positively correlated a lot of times, but flows, right? If one gets flows, you're generally going to see flows out of the other one. So this is USO. Coming up into a major level of resistance. I think if we were to draw that from a weekly chart, it would look a little bit different. There's still not much of an expectation that we're going to do, we're not looking at it like an energy revival like we had, a year and a half, 2 years ago. I think it's more of just getting right back up into that zone again. So we ought to be looking for short call plays soon. Not yet. I'd really like to see it get into 73, take that rejection, maybe offer us like an evening star reversal or something like that. But we're close. So if we're going to continue that upward push, then a lot of those oil names should be coming into play. Right. And if you look at sector rotations or just how the sectors have been doing using something like the visualize tab, utilities, energy, staples, they're the ones that are kind of turning things around. So, if we're going to get that capital rotation, then it needs to rotate the capital, right? So kind of the whole idea behind it. So if you're looking for short-term trades or day trades, energy, finance, the China ADRs, obviously they're going to give you a little bit of attention. I wouldn't try to trade directionally. SPY, the Qs, maybe the Dow. Dow's been making pretty good moves, but its options are trash. And otherwise, if it comes to the indexes, just run trades that say, I bet you don't move, like the iron condors. And that's what I got for you guys. Be careful, be safe, have a good day. I'll see you all tomorrow.